Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, we will apply the classical technical analysis over the short term for the precious metal gold. And as usual, we will start with the monthly chart, and as we can see, the metal is testing the monthly resistance around 1924, and of course you will notice a lot of volatility and some shooting stars as reversal candlesticks over the monthly chart, showing the selling pressure that appears around the monthly chart. Of course, as long as the gold closes below this monthly resistance, which is 1924, the environment over the long term is bearish and the structure of the metal is under severe selling pressure. Take notice that this is not a sideways and this is not considered a trading range, because a sideways or a trading range should consist of at least two peaks at the same level and two troughs at the same level, which is not the case in the gold, because we can notice that there was only one major peak, one major trough, and this is not considered a peak yet because it did not reflect to the downside yet, and it did not form the shape of the peak. We need a reflection to the downside with a significant percentage in order to apply the peak formation for this area, which is not the case until now. And as we can see, there is no any bottoms created around the same support, which was 1047. So you can never judge this area as a trading range. Now let us check the long-term picture as well as the medium term over the weekly chart. Here you can say that it is trying to form a trading range over the medium term, and it is not completed yet, because as you notice that we do have the higher limit of the monthly resistance due to the increased volatility around 2075, and here it goes, the monthly resistance we talked about from the monthly chart at around 1924. All this area is considered highly volatile area due to the increased volatility over the long-term Japanese candlesticks in the monthly chart. So it's an area of around $100 in thickness, maybe more. I think it's 150, approximately $150 in volatility, which is very high, of course, due to the increased price of the gold. Then we do have a weekly long-term support, horizontal one, and this managed to support the gold 2 times. And we see here we do have 2 times of resistance, and if we try to draw this, we can get 2 peaks, and we do here get just one trough, just one bottom. This is considered, this one is not considered a bottom, this is considered as a support, and there is a great difference between supports and bottoms. There is a great difference between the two. So keep in mind that this is not considered as a bottom, although it is a valid support. But here we do have fully formed support. So this is a trading range in formation, within formation. It is not confirmed yet. We need to form another bottom here around the horizontal weekly support at 1678. But for the time being, we can notice that the gold is performing weekly below the resistance of the monthly chart over the higher limit 2075. It reflected to the downside, and we notice it also broke the monthly support around 1924. So the gold is suffering from a disease of breaking supports to the downside, either reflecting from resistance, as this case, or breaking important monthly supports, as in this case. In addition, we can notice that it is breaking some shorter term supports, as we will see on the daily chart. For now, we can consider easily that as long as the gold is performing below the monthly resistance 1924, it is considered bearish over the medium and the long term, targeting the nearest long term support around 1678. That's it, unless anything exceptional takes place. Let's jump into the details of the short term over the daily chart. We can see here a short-term downtrend is being established, and the habit of breaking the supports is clear over the daily chart. Here we can see breaking of the monthly chart, then breaking of the daily support. Here is breaking of the monthly support, breaking of the monthly support, which is the most significant level that we have just talked about few minutes before, 1924. Then it broke below another short-term support at 1868. So over the short term, the gold is in a very bearish environment and under heavy selling pressure, and the short-term daily chart is confirming the downtrend over the short term and confirming the heavy selling pressure that we have noticed from the monthly chart as well as from the daily chart. So for the time being, as of virtual trading, do not consider going long, because this will be against the bearish environment in the precious metal, and consider going short virtually as long as the gold is below the broken supports. And keep in mind that as long as the gold is below 1868, it is bearish. It is bearish over the short term, and as long as it is below 1924, it is bearish over the medium term, and as long as it is below 2000 approximately, it is bearish over the long term. So you can see here how many obstacles are against any correction to the upside, and most of them are considered tough resistances that will face the gold if any correction took place. For that reason, please keep in mind that it's better to consider going short virtually after a break below 1800, preferably with a 2-day close and a stop loss above 1880 with targets below 1700. We will make this virtual trade take place, and we will record it in a separate video as soon as it is confirmed, or as soon as its signals are confirmed. Of course, in virtual trading, because this is a trade that will go with the prevailing trend, so it will be of low risk, and the virtual cash I think will be 5% for maximum. So we will continue to follow the gold for the coming maybe few days or few weeks, and keep in mind that we are watching the 1800 level over the short term, which will be our trigger if broken to the downside. Thanks for watching. Please like, share and subscribe, and see you soon.